so that we can always go back to it. All right, let's see. Yeah, so the session is being recorded. My name is Bola Balogun. If you are just joining us for the first time, thank you so much for joining in. If you've got little or no experience about Forex trading at all, kindly send a message into the room and let me know that it's your first time, or how long you've been trading, or you are a newbie, or whatever the situation may be. Let me know, because majority of the people that would have been part of this, that have been following me for some time now, they would have developed their trading skill to a certain level. So if you're just joining in, don't feel free to let us know that you are new, you know, so that we can tone down the training down to your level as well, so that we can always remember that you are there, and then we can tone it down to your level as well. All right. So today, as you can see, the S&P is up, the Nasdaq is up, the euro is up half of 10%, the crude oil is up 2.38%, the gold is up as well, Bitcoin is up. The only thing that is down on a day like this is the dollar. All right, the dollar is down, and obviously when the dollar is down, that will give the opportunity for investors to be able to grab cheap dollars and obviously invest it into the stock market, invest it into the commodity market. All right. So that is what we are seeing across the board for now. Going forward, so the dollar is currently down. So we can decide to look into dollar index. But the first thing first that we're supposed to do as a trader, as a Forex trader, is to check what our fundamentals is saying. So the way that we go about doing that is check Forex Factory. Everybody knows that majority of all the banking institutions, the big volume traders are not at work today. Okay, so we're not going to be looking into taking much of any trade today. That's what usually happens. It's not like as if the market wouldn't move, okay, but achieving your target in some in times like this, especially when the Swiss traders or the Swiss banks are off, the European bank, which is the French banks, they are not on desk. The German banks are not on desk. The Italian bank are not on desk. The UK bank are not on desk. So majorly the London session will be very thin. Majority of all our traders are sitting down in a beach rabat now, enjoying themselves. And obviously that will literally affect the trading volume. Okay, so the first thing that I would like us to investigate or to look at is we've looked at our Forex Factory, which is a way to understand what the news is. The other thing that you can do quickly is look at the headlines that's popping up as well, so you can know what the Treasuries is doing. You can know what the so U.S. stock futures decline in holiday it trading markets wrap, how U.S. ending Iran. All right, so that's got nothing to do with us. Let's look at rates and bonds, because we are dealing with the money market. So obviously, if we see any news that's got to do with interest rates, that's got to do with treasury notes and the way the government is borrowing money from institutions, borrowing money from individuals, the government who borrows money. So it's important for us to know. Goldman says Fed losing forecasting edge. Wow, changes game in markets. All right, oil spikes since India rupee tumbling at 1 month low. Rate cuts may not save ringgit. Bond rally as index of, while bond traders take stock after rebounding. US yield stalls out. All right, so that's one of them. Let's have a look at this one. So bond traders take stock after rebounding US yield stalls out. Bonds bears have been ascendant for most of April, and now they are looking to a key batch of data to determine whether 10-year Treasury yields rebound from a 15-month low as legs. All right, while the angst over a Chinese slowdown that drove last month's bonds rally has eased, questions linger about the global outlook as malaise in Europe persists. This week brings an update on the world's biggest economy. You can see that how that is going to be affecting the dollar with a read on first quarter US growth that's expected to be less there than originally predicted, though far short of a blockbuster. Reports on actual and expected inflation, both at the heart of Federal Reserve policy making now, are also on traders' radar. All right. Okay, so inflation is key right about now. And one thing you have to understand is this: if inflation is a concern, all right, if inflation is a concern, that would definitely affect the way that we spend money, because when price gets inflated, consumers will be thinking of not spending. They don't want to be paying so much for so little. The benchmark 10-year yield touched 2.61% last week, the highest since the Fed surprised traders in March by shifting to a more dovish stance. It settled at 2.56%, up from 2.34% on March, the lowest since December 2017. So you can see that the the treasury bonds, the rate at which you borrow the government's money is not really picking up. People are not getting more for their money, although it is safe. It is a safe investment, but people are getting little percent for their money, and then obviously they are looking to take their money out of the treasury notes and then put it into more riskier assets. All right, more riskier assets involves stocks and currencies in a way, but stocks, options are going to be the more, and commodities as well. Traders are now pricing in a bit more than half of a quarter point rate reduction this year, whereas a few weeks ago they were ready for more than a full call. We at this point in time don't have a high level of conviction on the direction of interest rates, said Margaret Steinbach, a fixed income investment specialist at Capital Group, which runs American funds with 1.6 trillion under management. You know what I mean? So when big firms like this that's dealing with 1.6 trillion assets are not happy, they don't have a high level of conviction on the direction of interest rate. They don't want to put their money, despite the fact that it is safe, they don't want to put their money there because they've got bills to pay. But given what we know in terms of economic data still being pretty strong in the US, it seems the fall in yields was too extreme. All right, so there's no conviction, yields falling. Look at how it went all the way down. Is extreme. Short-term rates are anchored, given Fed official message that they likely stand by this year, while any sign of rebounding growth should push up long-dated yields. All right, so we've understand a little bit of what they are saying. The Fed speak calendar goes dark this week in advance of policymaker May 1 decision for U.S. economic release, Chicago Fed activities, April 23rd, FHA house price index. All right, so those are the details that will be affecting the way the dollar move. All right, that will be affecting the interest rates of dollar. Durable goods, initial jobless claim. So April 25 might be a good day to start looking into sensible trading. All right, and then GDP will be released as well, and University of Michigan sentiment is also important. So on the 25th and on the 26th will be the days that trader will be thinking of which direction they want to push this market. For treasuries on the 22nd, on the 23rd, these are the amount of 422 billion of 3 months bills, is what the government needed. The government wanted to ask you for money, all right? So the government want to sell 3 months bill, 422 billion worth of it. The government want to sell 6 months bills, which means in 6 months, you would have borrowed the government 36 billion for a period of 6 months. You can see that the government too can need money. On the 23rd, they are selling 26 billion worth of 52 weeks bills, which is a year. You're going to be lending them this money for a whole year. and they want 26 billion from you. They want 40 billion of borrowing for 2 years. So if you've got large amounts of money at your disposal, these are the kind of thing that you can start to look to invest on going forward. So there's a lot to learn in trading. Like I said, I cannot take you into every single thing in one day, but yeah, as we are growing in this, you will be learning quite a lot from me. I'll be putting down my almost 13 years experience on the line. I will be showing you the resources where you need to go to in case I'm not there to build your opportunity. This is another website of one of my my colleague, my partner, one of the websites that we look at in the city back then, and then you'll be able to see some important updates coming up. An important aspect of trading is about anticipating what comes next. Major currency need to change over the Easter break periods. It's up. What's up? Excuse me, everyone, please. Right, so going forward, we are looking at dollar card brought lower on oil rally as attempts above 1.34 fails again. All right, so these are the few things that has come up. We can look at dollar card, we can look at oil to be break a story of 2019, and Donald Trump is not going to like this at all. The dollar Chinese yuan mid rate today, this is a fixed rate. US announced complete cutoff to Iran oil exports on Monday. Wow. So you can see the reason why the oil price is going to be shooting as well. All right. So when they don't want Iran to produce anymore, Australian quarter one CPI is due on Wednesday. Trade ideas trade. All right. And then here are the Forex centers open, close. Okay, so we have a brief idea of what Greg and some of my other colleagues here are saying. And then obviously we know that the dollar card, it's a dollar story, the oil story. This week, Aussie has got its story as well. All right, so what I'm going to want us to do is looking at this calendar quickly. Let's look at what's coming up for the whole of the week as well, okay? For the whole of the week as well. Bear with me a second. Let's say more. All right, so we can see that Aussie is coming up. Okay. We can see that card as well. All right. We can see that yen, dollar, Swiss dollar, and then New Zealand. All right. So New Zealand, for some of the people that have managed to trade the news with me, I've managed to show you the kind of data that I love to trade, that I love to put the straddle technique on for people who wanted to experience that the last time. And I showed them categorically that the best thing I can do for you is to guide you. If I guide you, if you listen to it, then you're going to see the results in your trading as well. The other thing that I can do for you is to fund you, and using a proprietary trading firm in London, you can get funding, and then at the same time, instead of you to be looking for capitals here and there or be blowing up your account, you can have this account that can save your life for the rest of your trading career. Just if you decide to have another account as well, then obviously you can do that. Some housekeeping rules. Let me quickly pop in here some of the important contact details, should in case you need to contact me, right? So you can literally go to YouTube. Say for example you don't have enough time to watch through all the session, all right? So you can type my name, Bolanle Balogun, on YouTube. You'll be able to watch some of the most recent videos on trainings that we've done. All right, so that's my YouTube link. At the same time, you can then join us on our Telegram group for funding. If you want to if you want to be part of our funding, you can join us on our two Telegram groups where we discuss trading opportunities. where we look after our members, where we teach them, where everybody is getting quality and beneficial trading education. So that's the YouTube channel. That's the funding Telegram group, then the training Telegram group where newbies are coming in and they are developing themselves and they are putting up their charts, which you can do in both room as well. Is this one, okay? And then you can then follow me on Instagram if you so decide, and follow me on Instagram, and obviously a financial market trader, financial markets trader. All right, and that's my Instagram handle. All right, so we've seen what is coming up. Going into it now, I want us to look into Aussie. All right, Aussie is breaking some barriers recently. We've got some news coming up in the Aussie as well. All right, so I'm gonna look into some harmonic pattern. I'm gonna look into some right. Please use this to explain the funding account. I don't understand fully. All right. So basically, what is with the funding effort? Someone want me to briefly explain that. What I'm gonna do is give me a second. I really wanted to do training right now. I don't know if you can send me how many hours have you got, right? And well, probably it's going to benefit others as well. Let's see. If I know how many hours you've got, I can briefly explain that as well, since it's going to benefit you. So what we do with funding is this: we literally provide traders with live trading accounts. All right, I'm going to briefly go through it quickly. The first package, as simple as it is. So what you're going to do is you're going to get a $10,000 live trading account from us. All right, and even on the Telegram group, there's a detailed explanation, but because you asked, let me quickly explain. So when you get a 10,000, this is the first package, a $10,000 account from us. We do not expect you to have more than 4% drawdown, okay? And then we expect you to have at least 10% target, okay? That $10,000 account on your part to show that, well, you are a trader, you want to be committed to receive this amount of money from us, is going to cost you £299. All right, so you may ask, what is the reason why you may need to pay? There are a couple of reasons why you have to pay for this. With the funding program, why we limited to some specific pair. All right, so to be honest with you, limitation to pairs is not what is the issue. You can see as much as possible pair over here. Some people are trading one single pair and making serious money on it as well. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. All right, so that's 28 pairs right there, all right? If you need more than 28 pairs, and I'm very sure on the platform there are more than 28 pairs because there's gold on the platform as well. There are a couple of other things on the platform as well. It's a MetaTrader platform. We are trying to bring up some futures into it as well, commodities into it as well. I mean, this is something that I do not believe that 28 pairs is too small. And plus on the platform, there are a couple of other more pairs there as well, based on your question, Hubert. All right, so 28 pairs, I'm very sure you can't even do analysis on 28 pairs in one go, and plus there are golds and stuff on the platform as well. But one thing I want you to understand is with the funding program, the main essence of it is this: when I start to do training and I start to do all this Telegram stuff, and I was invited to even become the admin. When I look at the group chats, I realized that a lot of people have got $500 account, $1,000 account, $2,000, and they are blowing it up. you know, just because they are taking excessive risk. Okay, so if you really want money, okay, and then you want to have money that's going to give you a bit of a peace of mind, and then you won't be taking excessive risk, okay, this is an opportunity for you, right? You do not need to blow up a $500 account anymore, because this opportunity, when you get a $10,000 account, what will tend to happen is each and every time that you hit a 10% target, right? It's an institutional fund, all right? It's an hedge fund money at the same time. So it's bank money. Each and every time that you achieve 10% target or more, we will give you double your accounts, which is going to be a $20,000 account. So when you attain $2,000 plus or more profits on your account, we will immediately give you $40,000. When you attain $4,000 profit or more on your account, we will immediately give you $80,000. And when you attain $8,000 plus or more, we will give you $160,000, and it goes on. When you attain $16,000 plus or more, we will give you $320,000. All right. So what I now wanted to do for you is this: out of all this that's being given to you from the first 10,000, the moment you attain $1,000 profit or more, at the end of the month, you'll be paid 50% of your profits. The rest of the 50% will be contributed towards your $20,000 account. All right. So when you attain $2,000 on top of that 20,000, which is 10% of 20,000, you will be paid $1,000. If you attain more than $2,000 or more, you will be paid 50% of that. All right. So which is going to be 1,000 plus or whatever amount that you attain, 50% of the 10%. Of course, that's the reason why I'm doing the training for you. That's the reason why I'm doing the training for you. That's the reason why we'll be picking up some trades. That's the reason why you'll be able to get as much as possible support from me. And the best thing that you can do for yourself is just trade a low lot sizes with all the opportunities. Look at here. Bear with me a second. Yeah, I want to give you the power to be able to use what we have on this Telegram group. Okay. Some of the students that we've built are coming up with trade opportunities. Once you know how to pick Harmonic or how to use Harmonic, all right, so these someone's that put up a trade opportunity, okay? So if this Harmonic is right and you can check all the patterns is right, all you have to do is put in a pending order of as little as 0.01 lots, right? As little as 0.01 lots. So you can benefit from the efforts of other people. While you are looking for trades, or if you've got a busy schedule, well, that's the reason why I'm saying when I first of all joining, I realized that that's what people are doing. Okay, people are blowing up accounts. So now I want to support you. Yeah, anything is possible, to be honest with you. I want to support you so that you can get the right mindset, the right habit for you to not just even be thinking in that line, because everything has got to do with mindset. If you continue to fix your mentality on that kind of a thing, instead of you to be fixing your mentality on I'm going to grow my account and start developing yourself and start attending this training and start attending this opportunity like this, and you're thinking of blowing up your account, eventually you'll be blowing up accounts. Definitely. But this account, you can't even blow it up because we've got a tough risk management on accounts. All right. There's certain amount of things that you need to put into consideration. The first thing first is, right. So I've explained the kind of growth that you can get onto this account. And if you are doing successfully well, be rest assured that the institution is ready to provide you up to 1.2 M. All right. It's ready to provide you up to $1.2 million. All right. So, but there are other things that's involved for you to be able to get any money from any institution, right? Even if it's a credit card money, obviously you need to have a very good credit score. So what we are going to be doing that any other firm is not doing is, instead of us to make life difficult for you and you won't even have access to this opportunity and say that, yeah, go and bring your trading records, go and bring this and limit you so that you can grow, is the $10,000 account. Once you pay your one-time fee, we will give you a $2,500 life account. All right. If you want more than $10,000, there are also different kind of packages, $20,000 package. All right. So if you look at this $20,000 package, yeah, this is one of the package that one of my main mentees Franca took on. All right, let me show you this. All right, so this is Franca's account. She opened it and posted it on the group. So she will get a $5,000 live trading account. She will get that's her equity, that's her margin as she's getting a brand new. Okay, this is one of my guy as well that took the $10,000 account. Okay, as you can see, he is only taking small positions, 0.01, with everything that is learning in the group. Small position. You can see that profit. You can see that profit. You can see that he has started to grow his account. Yeah, to 2,535. So that is the first qualification period. You will get $2,500 account. And then these are a couple of trades that he has taken that lead to the $32 profit that he's got before. You can see how he's limiting himself to that size, because this is a dream come true for most people. You got 2,500. After the 2,500, then you will let me go back to it. So you will first of all be given 2,500 just to check out your trading, just to make sure that you can follow the rules, just to make sure that you can be disciplined. All right, the maximum that I'm looking at on that is for you to meet a target of about 2,000 sorry, I said 2,225 dollars. All right, once you hit a target of $225, when Chris has got his account to 2,543, easily you yourself can calculate that he's got so amount to get $225. He will immediately get his $10,000 account. All right, so that's if he hits the $225 in one day, he has already opened the door to $10,000 account. If he hits it after 1 month, he has already opened the door to $10,000 account. You know, so and at the end of the day, you will get that $10,000 account. You will start to build before you know it. Money does not take long time to grow if you know where to plant your seed. And where to plant the seed is on this training. Where to plant your seed is understanding the harmonics. Where to plant your seed is understanding how EMA works. Where to plant your seed is understanding investing time in training so that you can develop yourself. You know, what does the maximum drawdown of $120 mean? All right, good question. Let's go back to it. So you are not expected to encounter a loss of more than $120. All right, and there's no way, if you're following the right necessary risk parameters, which is you got a $2,500 account, the maximum lot of trade that you're supposed to take on that account is 0.13. So in the case of my friend Chris right here, right? So what he's doing is, instead of him to take the 0.13 in one trade, he tried to break it down to 0.01, 0.02. So by the time you check this is 1, 2, 3, 4, and 0. This is 1, 2, 3, 4, 5. That's already 0.1. And out of that 0.1, he breaks it down to make sure that he can benefit from Cardian. He can even take multiple position on Cardian, yeah, and close them at different price level, and then obviously gradually grow his account. So I'm teaching you the tips and trick into how to do it. Okay, if I make 10% of 10K in 2 days, what happened? You make 10% of 10K in 2 days. You want to be able to show me how you're going to make that with those small size lots, right? And when you are able to make 10% of 10K, if you make 10% of 10K in 2 days, what happened? At the end of the month, you get your 50%. All right. At the end of the month, you get your 50%. At the end of the month, you always get your 50%. All right. So please, I believe this has opened you a little bit into the funding. All right. We can talk about funding going forward as well. Let's just do the training. Okay. I want you to have the training. Do I answer all the questions for now? For now, yeah, while we go into the training. As all some of the questions has been answered, I just want us to do the training. Once you are getting the training and you are happy with the training, then getting the accounts is the least of the issue. the training is the most important thing to me more than anything else. All right, because I know that you will always get the account. That's not a problem, but the training is key. All right, so let's start with Aussie dollar. All right. Exactly. I will compose all the, my email address is gonna be exactly. That's the reason why I put the contact details there, so that if you need, and obviously you know where to find me anyway. You know I'm always on Telegram, and then we can always do that one on Telegram as well, so that we can let other people benefit. Okay, from the training. All right. So that's all the contact details. Yeah, so going forward, this is the Aussie dollar chart. All right, let's look for a clean chart. Okay, so I'm looking at this clean chart. Let's look for possibility of let me see. I want a situation whereby okay. Majority of the time, I don't really like indicators, but yeah, it's good to use them. The ones that will work for you, is good to use them. So as you can see, the Aussie has literally hit an area of resistance. Okay, so and this resistance is more or less like the last swing high that we've seen in the Aussie recently, and that is the high of the 2019. So that is key, all right, on a daily chart. Okay, so all this move that we've seen that gradually find its way all the way up, it's a resistance, right? And then when it hits the resistance, it gives us the opportunity to understand that the resistance is ahead from this alphabets, these letters that the chart is giving us. So if you are new, please, I want to know how many people is here today that are new. I've got Akil, Charles Eze, Daniel Uba, Eddie, Emmanuel Akikoromo, Eniola Fazil, Felicitas, Franca, Godswill, Yanabo, Gomo, Lemo, Odira, Graham, Ahmad, Linguistic, Ababelok, Ifeanyi, Jason, Henry, Joe, Molumela, Joseph Mensa, Kachi, Kwakwani, Liatunrayo, Ellen Nana, Odunsoya, Ibunkun, Olugbemiga, Samuel Guru, Serena, Shala Brambles, Sikejo Tony, Tokwe Savage, Sakarada Daoud, Patrick Tachibi, sorry, Nate. Thank you all for joining in. I'm sorry if I couldn't pronounce the name properly. All right, but I didn't mean to disrespect your name. So if you're new, if you're new to trading, right, please don't hesitate to send that into the chat room so that I can have a pure understanding of who is here. All right. So what you're gonna be looking at is in fact, I like to look at a monthly chart quickly, yeah, just to see where I am. And so when I'm looking at a monthly chart, I'm seeing possibilities, and then those possibilities are going to be showing me what next is likely going to happen. So I can see that we have this bullish hammer. I can see that we have another candle that failed to do what? That failed to take out the bullish hammer. It's just when you have a month like this, right? That is a month whereby all the surprise that happens with this doji is corrected. All right, so this is a correction right here, and then I see that we have another month that gives us a doji, which shows me that we are not going down anymore. And then we have this month that literally it's the high of last month made a new high, right? And then now it's looking so negative. Okay, it's looking so negative. So the move up, we want to know most probably if it's going to stop, or this move up is now going to turn around and then start to look down. But for now, it's looking negative. Okay, there's no doubt about that. And then while it's looking negative, the best thing that you want to do is you want to be careful. The trend might be looking up, but for now, it's not a good time to buy. So what traders are doing is they are actually looking for that particular price that they're going to push price to, that's going to attract new buyers. All right, the price that they're going to push price to, that's going to attract new buyers. And there's a way of knowing where the new buyers are going to be. That may be a little bit advanced, but we can find it. Okay. So weekly as well, you can see that over the last week we have this spinning top. All right. And when you have a spinning top at area of resistance, all right, this is more or less like a teacup. It's more or less like a teacup pattern, and then you're seeing the sell-off coming in. So Aussie is weak. We've come down below the high of last month. All right. Now we are trading below the high of last 2 weeks. We are trading below the high of last week, or sorry, below the low of last week. So Aussie is pretty weak right about now. Okay. And then this weakness is expected to continue in as much as we continue to trade below the low of last week. All right. And the low of last week, bear me a second. Let's be building sense quickly into this as we go. The high of the previous month is at 71.68. So those are important reference points going forward. I'm just going to be picking up the reference point as we go little by little. In as much as we remain below this area, then obviously we are still weak. The Aussie is weak. Okay. So, all right. So going forward now, where we can find support and resistance is one of the places where we are sitting on currently. All right. And then obviously we can look at it at 71.31 area can be an area of important support and resistance for us. All right. And as you can see on the daily, we are actually approaching a congested zone. You can see that this area on the daily is an area of important resistance that end up breaking. All right. And one thing that I always like about the rule of thumb what's it called, of resistance that breaks and turn into support. So we might be encountering any support very soon as price continue to dig down and look for the buyers. All right. So the trend is up currently. The trend is encountering some sell-off, and this particular sell-off, we now have to be looking for opportunities in those areas to see if we can buy this back, or we can see any sign of buying this back that will push up the price. So that will take us to the 4-hour candle. Okay. So the 4-hour candle, sorry, the 4-hour chart. Remember what we've got here is, let's mark this up quickly. Is we've got an area of resistance right here. Okay. We've got a zone of resistance right here. All right. So this will be important for us going forward. We almost hit the high. What is the high of this? The high of this is 72.06, and the high of this is 72. For all the traders that follows me, you know that you can find the highs right here. The high of this is 72.05. All right. So if the high of this is 72.06, okay, and the high of this is 72.05, that already signifies to me that this move up is weak, right, compared to this move that we see over here, because that is slightly lower. All right. So going forward, we are now approaching an area where price can bounce back up. All right. Where price can bounce back up, and then that is what we are looking at. So I'll look into 4-hour chart now, okay, to see how this trend actually come into be. All right. So this trend did not just form out of nowhere. We can see precisely we have a trend down that is starting from here before. All right. So let me. Okay. All right. So one thing I always show my mentees or my followers or my students, based on that 12 years experience that I've learned, is once you have your trend line, right, all the prices that is below this trend line to this side, all you want to be doing is you want to be selling anything underneath the trend line. Okay. But once you have a trend line break, which we can see over here, that is the beginning of you thinking of, okay, most probably things are going to change now. I have to start looking for buys. Okay, so because we're still above this trend line, we're going to be looking for buys. So that will now lead us to understanding of where do we want to find our buy? All right, so you can employ what is called a channel. All right, so that channel is what is going to show you which current direction you are going, where you are currently, and how things are literally setting up nicely for you. All right, so with this channel now, you know that each and every time when price reach the top part of the channel, price tends to break back down to the bottom part of the channel. We hit that top part of the channel, price is now breaking down, going towards the bottom part of the channel. But you want to make sure that your channel is sensible. All right, you want to make sure that your channel is sensible in the sense that you want to have some points on this chart that will show you that your channel is sensible. One of the points is going to be this low here. The low of the previous trend is very, very important. Okay, the low of the previous trend is very, very important. And then after the trend line breaks, okay, the retest of that area that is important, which is going to be more or less like a structure for you, is very important as well on a minute time frame, like the 4 hour. All right, so what I can see is as we're coming down, the moment we get over here, we made a new low, a new high, right? And then price tends to come down, and then we made another high over here that's almost the same as this, right? Until we break that up, and then that is when the push start to go up. All right, so if I looking at this area, this is the area where price supposed to continue down. All right, price is meant to continue down like this, to continue to follow this downtrend. But unfortunately, for one particular reason, all the seller encounter the shock and price start to rise up. Okay, so as price starts to rise up, what we'll be seeing is possibility of thank you. Right. So what we'll be seeing is possibility of looking for what that structure will be for price going forward. All right. And you can see that when we now encounter the real break, okay, we have a break here. First of all, I do not want you to forget that this is a 4-hour chart. All right. And I'm going to show you this quickly. So when you're looking at this 4-hour chart, I want you to see this as well. When you look from here to here for Aussie, okay, this is about 196 pips. Okay, this is about 196 pips. For the traders that has been following me, that knows some of the tools that we employ, one of them is called matter.net. Let me quickly go to it and show you this. So matter.net, you'll be able to see on the average how much the Aussie is meant to move. All right, thanks. So you go to what is called the forex volatility, and then if we type the last the period that we are comparing is about a period of 10 weeks, we can shift this and say 4 weeks even. Okay, we can say 4. All right, and then over here we just choose Aussie USD. When we say 4, we click this to refresh it to 4 weeks, and then we say Aussie USD, and then we click it. So on the average, the Aussie is meant to move about 51 pips on each and every day currently. Okay, on a Monday we usually move about 38 pips. Okay, and then right about now, one thing you are seeing is, you see, once you see the graph is going up like this, it's showing you previously in 2018 how people are in 2017, the kind of acceptance that people are getting for Aussie. The demand for Aussie is literally rising. Okay, and then that demand came down in 2018 drastically, and then went up back around 2018. So right about now, majority of the traders are not literally happy to hold Aussie. The reason why they are happy to hold Aussie around all this time is because of the interest rates in the Australian economy that is so high. So now that the interest rate is going down, they are no more than happy to own the Aussie as such. Let's have a look at this. I believe Forex Factory used to have the interest rate. Let's see. 1 second, please. It used to be on this side. Wow. Okay, so this is what we're gonna do. We're gonna do this. I want to show you this currently. G7 currencies current interest rate. Okay. All right. So the point is this: when you look at it, this is Federal Reserve is currently giving Reserve Bank of Australia is currently giving 1.5%, right? If you hold in Australia, you have 1.5%. At that point in time that I was showing you over here, um, they were giving close to about 3 to 4%. Okay, so that's why the demand was huge. It was over 2.5% that we are getting for holding the Aussie. So that's a way to bring people into an economy. That's a way to attract people into the economy because you're getting high interest rate. So the ones that's giving more interest rate right about now is the Federal Reserve. So you're gonna see flights of currency going into the dollar more than anything else. Remember, trading is all about supply and demand. Why do you want to hold a currency that doesn't have a good value, that's not in demand? So one of the reasons to get a currency to be in demand is the interest rate. That's why the interest rate decision is very key. That's why when the FOMC or the Reserve Bank of Australia is speaking, that's why it's important for you to pay attention and you can make a good money from that. All right. Are you all still following me? All right. So currently Australia is not giving an attractive interest rate, and that's the reason why you see this coming down like this. People are not interested. People prefer to take out their money. You can see that the support has been broken and then even retested. People prefer to take out their money away from Australia and put it in a much more attractive dollar right about now. And that's what you're seeing. When it comes to Swiss, it's negative. You don't want to hold any currency in the Switzerland. You don't want to own the Swiss because you're not going to be getting anything for the money. So you won't see a sense of attraction of traders and when it comes to Swiss. Let's have a look at it. So say something like Swiss yen, for example. Well, but we want to look at dollar Swiss because dollar is much more attractive than Swiss, isn't it? So, but we should be looking at the Swiss yen as well. People are going to be, you can see, when it comes to the volatility, people are not interested in the Swiss, okay? And then the value is literally going down. Let's look at Swiss yen. So the one that people are interested in is the one that you're going to be seeing that the volatility in it is going to be going up. All right, you can see that when it comes to Swiss and the yen, the attraction is not there at all. Okay. All right, so yeah, so that's one thing that I want to show you briefly. Going back to our training, differentiate. Ibola, can you explain how we differentiate a shark from a cipher and a gatly from a crab? All right, so good question. So if I quickly diverge briefly, the difference between a shark and a gatly is one particular number. All right, and I want you to take note of that number. And that is 78.6 Fibonacci. All right, I'll repeat it again. And then we're going to look for opportunity of looking for a shark or a cipher pattern. I'll show you now. let's write this down. Shark retracement. Okay. Cipher retracement equals 28.2. Yeah, and it shouldn't close. It shouldn't close at 78.6. Okay, so you can have 38.2 to, let's say, 77, for example. It doesn't have to get to 77. You can wick it down to 77, and the body is still closing above 78.6. For shark, okay, equals shark retracement is not relevant. Not relevant. The retracement of shark is not relevant. Which I mean the not relevant. The B leg, that is the B leg. The B leg is not relevant. Okay. The B leg is not relevant. That is the B leg. The B leg. All right. So in some school of thought, you will get 38.2 to 50%. Okay. But one thing you have to consider is sometimes you get it down to that 50%, and then you got a week that goes down over the 50%. Okay. You get a week that goes down below the 50%, and the ideal body will be closing at 50%. Anyway, so let's look for this. Say, for example, I'm seeing something that look like it in this currently. If we're going to move forward. So, and you know that the C will always be above the A in a bullish. So look at that. So if this is going to be a cipher pattern, all right? If this is going to be a cipher pattern, you want your D to be, 1 second. Let me take off the magnet. Your D will always have to fall in at 78.6. 78.6. So somewhere here. So we have a cipher pattern, possible cipher pattern coming up around there now. All right. Let me change this color to this, possibly that. Okay. So say, for example, now we have a possibility of a cipher pattern coming up on this particular Aussie dollar, as pointed by as requested by Akil for us to do the difference between a shark and a cipher pattern. All right, and one thing I'm going to give you is this. Let me give you the cheat sheet as well. Okay, inside the cheat sheet, you will need the cheat sheet, all right, all the time for you to be able to recognize some of these patterns. So for the shark pattern, unfortunately for this cheat sheet, there's no cipher pattern there, all right? There's no cipher pattern there. But the ratio for cipher pattern all the time that you want to be saying is you want your D. Let me show you this on the chart. Let's blow this up a little bit. Right? So your A point, yeah, have to have a C point that is always higher than the A point, okay? That is always higher than the A point, okay? Your A points, your C points always have to be higher than the A points, all right? Your A or your C points always have to be higher than the A points. Bear with me a second, please, guys. All right. So, and then you want your B points now. However, you want your B points to be at least 61.8. All right, so this should be coming in at 61.8. All right, so this one right about now, right, it's a little bit over 61.8. Okay, which means this has gone into the territory of a Gartley pattern. This has gone into a territory of a Gartley pattern. But for the sake of this illustration, you want it to be at least to close above 61.8. So if it closes here, so we can use this body now and say with this body, we still within a cipher pattern range, okay? The body is what is very important when it comes to harmonic as well. The body is very important when it comes to harmonic, especially on the B points retracement. In the cipher pattern, is there no number range for the C leg? All right, so the number range for the C leg is between 1.27 to 1.41. Okay, 1.272 to 1.41 is the number range for the C leg. You do not want your C leg to pass 1.41. You do not want it to. This is going to be your ideal, the last point for your C leg. All right, between 1.27 to 1.4. All right, you don't want it to go past level like this, but in this case it hasn't even get there. All right, so for this harmonic to be valid for cipher, we're looking for 1.27. This needs to be 1.27. Please, I'm just using this for illustration purpose. All right, I just want you to have an idea. This doesn't mean that this is a valid cipher pattern. Okay, we have to combine all the ratios together to get a valid cipher pattern. But I want to show you what it will at least look like. That it's not going to look like something like this that goes beyond the X, right? The D points always have to be at 78.6, and your D points, all right, your B point should never be on the same level as your D points. Your B points will be up like this. That is going to be up like that between 1.27 to 1.41. This is going to be in between 38.2, right, from somewhere like this, 38.2, okay, to maximum of about you don't want it to get to 61.8, right? So here, considering the body not the weak, okay, considering the body not the weak, this is valid for cipher. This, we want the I to go a little bit above to at least 1.27 to be valid for cipher, all right? And then the next thing is your D points need to be at 78.6 exactly. 78.6 exactly will be your D points. Is the cipher pattern, is there a number range for the C leg? Yeah. So do you want us to write it down? Sorry, let's write it down. Okay. All right, so cipher pattern. So what we are looking for is X to A, okay, which means X to A, this particular X to A, right? Retracement, right? And one thing I want you to understand is the cheat sheets are there as well, okay, which I'm going to give you so that this wouldn't take most of our time. You can always refer back to it. We have one in the group. This particular one, you can always refer to. You can see at least 38.2, all right, must close below 61.8. So what that is saying to you is you want to have your cheat sheet like this. Let me show you. Maybe if you're using a laptop, okay, if you're using a laptop, then it can be easier. Please check your battery. Oh, right. Yeah, thank you. Please, I'm going to quickly deal with the battery situation right now before we get on there. All right? Bear with me a second. Let me get my charger. I'm outdoor. Thank you for that, Nana. I'm going to get my charger. All right. So thank you for noting that. Okay. So good question. I'm coming 1 second. Let me improve my the brightness of the screen. And I'm gonna get my glasses as well. All right. Because the screen can affect my eyes. So please bear with me. All right, ladies and gentlemen. Sorry, and thanks for your patience. Right, so I got my glasses now. Yeah, everything is looking cool. Right, so Bobby Collins, I got your question. Um, so one thing I need you to understand is this. Excuse me. When you're drawing your harmonic, right? The first thing first is, are we drawing it on the same broker? Okay. Are we drawing it on the same broker? You might be using a different broker compared to the broker that I'm using. Okay. So I'm on Oanda currently. Are you on Oanda as well? Are you on Oanda as well? Yeah, my C leg, please, if you are on Oanda as well, then so check whichever broker that you are on, okay? If I switch this to another broker now, let's do this quickly. Well, I'm gonna come back here because that's where we are doing our analysis. So you are bound to get different kind of harmonic. All right. So I think I've done this one before. Let me just hide it so that we don't have to. All right. So there's some analysis that we've done on this before. And then I think this is the particular harmonic that we are looking at from here to here. Okay. And we've drawn that harmonic before now. Okay. So you can see this is exactly what you are talking about. Okay. This is exactly what you're talking about. When we are on different brokers, all right, the way the price is generated or the way the price moves on different brokers is different. Okay. You can get one pattern on this broker that the value will be different to the other one. And that is what brings me to this, which I need to share with you as well, ladies and gentlemen. All right. So I've got 32 people in the room. I know that we are a stand learner. We are ardent learner of the rules of harmonic, which is because, yeah, you're going to get a different price. You're going to get a different, right. So I don't want you to be a stand learner to to not being in, to not using intelligence. Okay, you have to use intelligence when it comes to trading. Okay, you're going to be getting pricing from different brokers that are obviously different to another broker. The reason being is this. Okay, I need you to understand trading to a point whereby, and I want to open your eyes to this as well, is when it comes to pricing, different brokers have got different pricing levels, okay? Because the particular rates that they are buying from the FOMC, that they are buying from the big institution, okay? Everybody is buying their euro at different pricing level, okay? Everybody want to make money on those offers that they are creating or on those orders that they are creating. So they will tend to give you a separate quote. It's not going to be the same exactly like that, all right? So before now, when we have an online trading platform, you can even have a different pricing that is completely different to what we are seeing now. But now, because we've got online trading platform, right, there is competition in the market. Everybody is competing with one another. The pricing now have to be so close to one another, because if I know that I can get Australian dollar cheaper, all right, from Oanda than FXCM, who do you think I'm going to go to? So all of them is watching their price. All of them is trying to give you the best that they can give. And at the same time, they want to make money as well. Okay. So you're going to get a different pricing model with different brokers. And another thing is when you now get a different pricing model with different brokers, the calculations that you're going to be getting with your harmonics, you know, harmonics is mathematics, right? The calculate is got to do with Fibonacci number. The calculation that you're going to be getting with your harmonics is going to be different because those pricing are slightly different as well. All right. Is that understandable? So harmonics, the calculation will be taking all those prices together and then be giving you your necessary calculation for each and every broker. So if you find a pattern on one broker, all right, so say for example you find a pattern on Ohanda, the good thing about harmonics is because there's high probability that it's a high probability trade, right? Your direction for every one of us, we see go in the same direction, and in as much as you take your profit at the right target level, considering some other points, say for example now we want to take profit. Let me just say this for example, okay? So if you are on Oanda as I am now, right? And then let's assume this is right, okay? And then you have your TP1, TP2 profit target level like this. 1 second. Let me build this up quickly. So I'll go to settings. I change my template to target profits alone, okay? So let's assume this area is where I'm looking for my target profit, TP1 at 0.382, okay? If I look to my right, 1 second. Each broker is offering better interest. All right, so the pricing difference at different time of the day, okay? If you're looking at Australian dollar now, right? Obviously, you're going to be getting a much more better price with a broker that's in Australia, all right? Just slightly. The pricing does not really matter or compare to kind of results that you're going to make. And this is what I wanted to show you now, right? So your first target profit is this. And these are simple tips and tricks that you need to understand in the game. Is at 38.2, right? Okay, so this 38.2 target profit, if we take a trade from here now, all right, that is going to give us about 29 to 30 pips, 29 to 30 pips, okay? That 29 to 30 pips, now I want you to pay attention to this. All right, I want you to pay attention to that. So your target profit is going in the zone of what? It's going into the zone of a resistance all around there, okay? So instead of you, if you enter this trade early, all right? If you enter this trade early and you're even going for maybe TP2 or TP3, your TP1 You cannot afford to let your TP1 get to 38.2 exactly. All right, so you want to take your TP1 even at 21 pips, okay, somewhere around there, just within the zone, so that it wouldn't be a situation whereby your price would have first of all reached about 21 pips and you didn't take profit, then it turned back down already, and then you are still thinking to yourself that, God, look at what I've done. I've nearly eat it, okay? Right, yeah, so I think that's a good point. So you want to take your profits way before you even get to 38.2 when you are seeing congestion. Look at this. This is a resistance zone, right? All right, before it got broken. Over here as well, price come back to it as support, okay, in this zone as well. Look at here, it's more or less like a resistance zone. Over here is a resistance zone. So if your price is going towards a resistance zone, look at it over here, it's a support, almost a support right there. So there's a force going on over here, right? Yeah, we're still on Aussie dollar. Definitely, we're still on Aussie dollar. So your first target profits would have been taken way earlier, all right? So that even if price now decides to come back down, and then you can still take advantage of the price going up, and obviously you can then do so again. So this particular cipher pattern, in this case, excuse me, particularly on this broker, on some broker, it's well formed as a cipher pattern. Yeah, still on AU. So what I wanted to give you as an advice is this. Yeah, you are learning harmonic, right? So that you can play by the rules, okay? You are learning harmonic so that you can play by the rules. But you have to understand that you have to be using your intuition to be bending the rules sometimes, not all the time. And when you are bending the rules, you are bending it in a sensible direction, okay? All you want to be keen about is, where is my D point, okay? You know all your ratio, all right? Harmonic is the last confirmation, supposed to be the last confirmation of your trade, okay? So you have to have, say, for example, you are looking at this like this. You are looking at a point like this, a structure like this. You are looking at all this, all right? You are looking at this. This would have been a very valid trend line for you, okay? You try to extend it up. So you saw these points here breaking the trend line, but obviously price didn't close below it. Then this can be a very good trend line for you. Rather than using this point now, your point has shifted to here. And then price continues to go all the way up like this, okay? And then that's the trend line right there, okay? So obviously, when you're looking at price, you've broken this trend line, right? You are looking at your harmonic in this zone at the same time, okay? But what you are looking at again is all this that is building up. You remember we talked about it, that price is actually hitting a zone right here, and that is going to be a zone of what? A zone of support for price, okay? So you are already considering zone of support again, all this congested zone. Well, this trade might be a positive trade for me because I'm hitting a what? I'm hitting a support, all right? So my harmonic is almost in this region at the same time as well. Okay, that's two things. The third thing again now is, look at it here. We literally take a bounce here and then price retrace back up, and now we break that trend line. Okay, just because we break that trend line, that doesn't mean that when price get up here, price cannot break it. The trend line is not going to be a solid trend line. Price can break this trend line. You can even adjust your trend line to be over here, all right, and give it a little bit of more room. That, oh, look at this. We break this trend line now, which is our first point. We come back to retest it, okay, just to confirm that that trend line now has been broken. Price is coming down to this area of support right now, okay, and this area of support can literally lift price up, coupled with the harmonic that is present in that zone to 38.2, okay, and beyond 38.2 to 61.8. And beyond 1.8 to 100. All right. The reason why that can happen is the trend is in fact still up. Okay. That is one thing that you can consider. Bear with me a second. I want to check that chart. All right. So someone gets it on another broker as a valid pattern. All right. With my own ratio that I'm getting over here, it doesn't look too valid to me, okay? But on another broker just now that we've checked on FXCM is a valid broker. I usually use FXCM as well. So on FXCM it's a valid cipher. Let's check it. But just because I want a clean chart, I come to Rwanda and Rwanda is playing me in a funny manner. So for FXCM from this low, right, to this level, okay, to this high, everything is valid to me. This is a valid harmonic pattern on FXCM. All right. So if we're going to be talking about validity or no validity, we will see a valid one on FXCM. Meanwhile, on the Rwanda that I'm checking out, it's not valid. Okay, it's not valid. All right. So, and that is where judgment will come into play for us. So on FXCM, it is valid. On Rwanda, it's not valid. For the question of validity, we can stick to FXCM. Okay, for question of validity, we can stick to FXCM. But I'm doing that analysis on Rwanda, which obviously I can bring down to here. It's almost here as well. But I've done analysis over here, and I want to start the analysis from the beginning so that you can see it clearly. All right, so we are hitting a particular support zone over here. You can see, all right? And that support zone can literally mean that we are hitting that harmonic. So now we have two confirmation, right here. The support, the price has gone above an area of resistance before, and now we are forming a support. All right, so this particular support now can now add to our harmonic, making two reasons for us to take this trade. There are a couple of other reasons in which you can look at to take this trade as well. All right, so one of them again will be this. Should we go back to the previous charts? Right, so when it comes to week, the body is essential, yet beyond the week when it comes to trading harmonic. All right, I'm giving you a sense for you to understand that you can play around things, all right, and things are still gonna work. But if you're gonna play around things, you need to have multiple confirmation in a zone. Okay, you need to have multiple confirmation in a zone. Harmonic is not God. Harmonic is not holy grail. All right, that doesn't mean that some harmonic pattern wouldn't fail. Okay, what is essential for you is what is the trend. Okay, is the trend, are we still in an uptrend? In this case, are we still in an uptrend? What part of the charts are we on? All right, let me now show you a couple of things quickly. I can trade harmonic differently to the way that you will trade harmonic, because I've put some points on my chart that will let me know that this one that I'm looking at right now is valid for me. Let me show you quickly. You remember we looked at a weekly chart, all right? And the weekly chart that we looked at, I saw a particular price point there at 71.36. This particular price point at 71.36 and this particular price point at 71.31. All this zone right here, it's making my harmonic much more stronger for it to be a valid move up, all right? Because we are now hitting a zone of weekly highs, weekly lows, previous weekly lows. And that's the reason why I have this line drawn up even before we get to the harmonic part. So obviously in this region, right, if price is approaching an area of weekly resistance before or weekly support before, then you can expect there to be a reaction. All right, is there any rule? Is there any rule one has to check out for before locating X to A leg? Yeah, good question. So your X to A leg always have to come from an area of previous support. Okay. The first rule that I give everybody is this. If you're looking for a bullish harmonics, right? If you're looking for a bullish harmonics, there's a point on the chart to look for that bullish harmonic. Okay. And the point on that chart to look for the bullish harmonic is when price is retracing back down. All right, which means the trend would have established itself as an uptrend, as you can see. Okay, so that when you are looking for a bullish harmonic, you are looking for a bullish harmonic in a zone whereby price is retracing down. so that that previous uptrend now can now help your harmonic to project it forward. Am I making any sense at all? So you don't want to be looking for a bullish harmonic in a downtrending market. Reason being is this: you might be targeting more than TP1. You might be targeting up to TP2, and then you want a TP3 and you want more than TP3, all right? So if you want excessive target profit along the way, all right, and you want to be looking for a bullish harmonic, isn't it sensible for you to now look for your bullish harmonic in a market that is bullish, number one, that is now retracing, number two, so that you can now take advantage of that retracement and then be able to project price upward like this? It's just a sensible professional tape, all right? Then you can be looking at 94 pips. You can be looking at beyond 94 pips. You can be looking at 105 pips, okay? So going forward, for this particular harmonics on a 4-hour chart, it's looking sensible to me that it's playing up to be a buy. One second, please. Kindly display the checklist again. All right. So when you're talking about the checklist, so that you can take a picture, right? Let's see whether I will send you the checklist. 1 second. That's my uncle. We got a checklist right here. All right. So are you talking about this one? Is this the one that you're talking about? Have you taken your screenshot? If this is the one that you're talking about, we've got this in the room as well. In the Telegram room, you can check it out. All right. So this is what I want to show you now. Remember quite vividly, we've drawn the harmonics, right? The harmonics is valid, okay? We are hitting a zone of previous resistance, right? Broken, all right? It's going to turn to support. Previous resistance broken is going to turn to support. I want to delete all this now. 1 second. I want to give you more sense into this, okay? So one of the checklists is this. I'm going to write this down. Right, so let me send it to you. It's up here. Right, guys, you're going to be questioning me like mad, and then we'll be diverging. I'm going to stop looking at the chart for a second now. Let me quickly do this checklist, all right? So one thing that you want to consider is you want to look at your harmonic will have to be your final confirmation, all right? Harmonic will have to be your final confirmation. One thing is trend line, right? And I'm going to show you this now. Trend line, the order is support and resistance. Okay. Another thing that you'll be looking at is your candlestick. That's forming at that particular zone. All right, and I'm going to show you. Another thing that you're going to be looking at is your. You can be looking at your Fibonacci's. All right, you'll be looking at your Fibonacci's. 1 second. Give me a second, guys. So, give me a second, please. right? We are literally on fire right now. Okay, so we are going to be looking at a couple of things. We always try to look at those things to combine our harmonic together. So it doesn't have to be just looking at one particular thing alone. We have to look at a couple of things together to make our harmonic have sense. It can be that harmonic pattern with support and resistance. Okay, it can be that harmonic pattern with support and resistance. Yeah, that means you have one thing right there. It can be the harmonic pattern with support and resistance. It can be the harmonic pattern with your fibs, which is Fibonacci. I like it with fibs. Yeah, and then it can be harmonic pattern with say for example an overbought or oversold overbought or oversold oscillator. For you to add an oscillator to it, all right? And then it can be it can be it can be your structural zones, all right? So in this case now, it can be 6 previous, I'll say previous daily, weekly, monthly, high and low zones. All right. So I've given you serious I've written trend line, right? It can be a harmonic pattern with channel support and resistance. So now you are building a sensible tip towards your harmonic. All right. But what is harmonic in itself really? How does it apply to a chart? How does it apply to trading? Let's quickly look at this exercise, right? So I want you to pay attention to this, ladies and gentlemen, right? I know that we have diverted a little bit, and I was trying to put structure behind this. Is I want you to remember quite vividly. I'm coming. I'll still give you some write-up, don't worry. But for the sake of the explanation, is we have this trend line, okay? And then now this trend line is broken, which gives us the opportunity. It's just because one of the students jumped ahead of us. That's the reason why we diverted so much. And then, yeah. But I want us to get to a reasonable conclusion. We have this trend line, and I've shown you that all the prices below here, below this trend line, you want to be selling them, all right? All the prices above this trend line is an opportunity for you to buy. And then what you end up finding again is that now you have a channel that's showing you which direction the price is going, which is to the upside, all right? So we've moved away from this downward pressure. Now we are facing the upward direction. And if that is the case, one thing I need you to understand is the trend is still up for now. We are still inside this channel. We can see possibility of price coming all the way down to the end of this channel. For channel traders, they don't really care. They want to be taking their trades at the end of the channel, especially when the channel has proven to be a channel that is showing some positive, right? A positive touch, okay? Right? And then obviously when we break it, we have a negative touch. So you are having a touch on top of the channel, and you break it, you have a touch back to the channel. So the channel is forming a support. You break it, then it's forming resistance. All right. So we can have a positive touch of the channel. All right. And then obviously at the bottom as well, we are having a touch. Now we're having a touch at the top of the channel. So if you've done your analysis way before price gets here, just after you've seen the break of this resistance, and you are following up with your analysis, this would have been a very good area for you to start to sell the Aussie. All right, but where are you selling to? That's another question. So for you to know where you're going to be selling into is a thing whereby you now have to employ a little bit of more technical analysis. One thing is for you to be able to draw the harmonics, which is fine. That is not a problem. But where are you finding your harmonic? Is that going to be a question that you'll be interested in? So once the trend has started to go up like this, the first thing you want to get is, how did the trend manage to change? Okay. how did the trend manage to change? Remember that we are coming down. This trend line is over here. The first indication of a trend change is going to be when we break this trend line, okay? And then the next indication of the trend change is when we come back to test an area of previous level of resistance that was broken that will now turn into support. So we managed to find that area, all right? So this is the area, this is the zone. So this is the zone that is keeping on us in this market. This is the zone that is showing us that the trend has been broken and we are going up for now, all right? And this particular zone as well is what you will be looking at and be saying that, okay, the price moves in waves, right? The price moves in wave. So you're now going to be thinking in your head that, okay, let's have a look at these locations. You can say to yourself, let me bring a Fibonacci from this high now to this low, okay? And then you want to see whether this area of support is making any sense or is lining up to something. All right, so the way to do that, let me go to settings. I'm going to go to reverse. I'm going to change this to robust. That's my different. And then what you're going to be seeing is, I'm going to delete this again. I'm going to start from high, okay? And then I'm going to take it to low. All right. And then literally what I wanted to do is extend it forward. And I want to be looking at my Fibonacci. Now I'm combining my Fibonacci to it, okay? So ideally, when we see this break of 4-hour trend line, right? The challenge that we're supposed to be looking for is how are we going to get these retracements back down to this zone? Why is it this zone? Do you remember why we picked this zone? Right? So this is the zone whereby the price break out from before you even go ahead and break the trend line. All right. So this zone is important to us in this stage. And at the same time, this zone is important. So the low to the high gives us a zone. And you can see how prices has broken that zone and coming back to retest back inside of the zone. All right. So this is a good zone for us to hold. All right. So when we have the break of that trend line, we held this zone. All right. So holding this zone now is something that is important to us in knowing where future prices are going to go. All right. So future prices that we are expecting price to go to 1.618. Okay. That's where we are expecting price to go to. But for now, we haven't even seen that 1.618, which is good. Okay. So what you are getting right here is a what? 1 second. So this is our ultimate target, okay? This is our ultimate target with the break, with the all of the move that breaks that trend line. This is our ultimate target right there, yeah? And we haven't get to that ultimate target. In fact, to get to that ultimate target, where price is currently, we see have about 131 pips, okay? So looking at that ultimate target so that we can continue to keep ourselves in perspective of what kind of trend that we have after the break of this trend line, what we're going to be doing is we're going to be looking for opportunity to buy. All right. So part of the opportunity that we're going to be looking into is going to be a channel support and resistance. So we have a channel here now. The best place to buy this would have been somewhere over here if price would get there. Okay. If price is going to get there, then this place would have been the best place to buy this, and so that we can be able to take on this opportunity. All right. And then obviously be able to take it up to about 166 pips. Okay. Now that we have a channel that is giving us a clear indication, but does it mean that the price will now come down to this level? All right. That is a possibility. Price can literally come down to this level. In fact, this level would have been the best level for us to have been buying this should in case price comes back down to this level. But does it mean that we cannot have a trade in between levels? Of course, we can have a trade in between levels because this can now start to turn all the way back up. All right. So there are a couple of things that we need to see for us to know that this is likely going to turn all the way back up. Then what you're going to employ? The first thing you will employ that will give you peace of mind to know that this is going to turn all the way back up is a tool that is called what? Trend line. So while you are looking for your harmonics, or even if you find your own harmonics, then the next thing that you want to do is you want to check whether things are in the direction that you want it to go to by employing what is called a trend line. Wait for the chart to pop up. I'm changing the time frame. And bear with me a second. And we can choose an hourly chart or a 30-minute chart. For this illustration, let's use a 30-minute chart so that we can see our points on the trend line properly. So your ultimate buy for this trend to give you more than TP1 and TP2, okay, is you literally want to see that your harmonic is breaking another trend. All right, you want to see that price is breaking another trend upward, okay? So that's a good confirmation for you to say that, oh, wow, look at the way this trend is moving down. You remember everything under the trend line is going to be a sell opportunity for you, but we are looking for a buy opportunity in this. All right, and for us to get that buy opportunity, we need to employ every tool that will show us our price is now ready to go up. For now, at this stage, this price is not yet ready to turn. This price is not yet ready to turn, because the moment this price is going to turn, we're going to see it turning and we're going to see it breaking this trend line, and then things are going to start looking upward. All right. Does that make any sense at all? Does it make any sense at all? So what I wanted to do for us is we start this class at 11:30, right? We start this class at 11:30. We've been talked through so many things between 11:30 to 12:30. That's 1 hour, 12:30. So we've spent more than 1.5 hours engaging in disturbing our brain to understand the analysis. All right. What I'm going to do is I'm going to give us at least 10 minutes break, okay, so that we can relax our brain a little bit, so that we can regurgitate what has been said, so that we can store that in our medulla oblongata, so that we can make good use of that going forward. All right, so we're going to take a 10 minutes break right about now. And then after that break, I'll come and write down the confirmations again for you to see. But what I'm going to do is, for the sake of people who want to copy this, all right, for the sake of people who want to copy this, I'm going to bring it up on the screen so that you can get to copy it. These are the particular kind of confirmations that you need to be using with your harmonic to make you a master trader. All right, if you really want to take harmonic and you want to take it so serious, I want you to be employing the right tools with it. All right, I want you to be seeing things. You have to be looking at trends. You have to be looking at what part of trends that you are. You have to be thinking to yourself that, all right, if this is going to go up and it's going to be in alignment with the trend, obviously certain conditions need to be met. All right, so we are in an uptrend. We're going to be looking for a bullish harmonic. A bullish harmonic, if this is your first time, I always show everyone the tips and tricks that I use to be able to spot harmonic as quickly as possible. So over the next classes that we do, we're just going to be spotting harmonics. We're going to be spotting harmonics, and we're going to be spotting harmonics when we come back. All right, so this for me is a bullish harmonic. If I see anything going on like this and it's a M shape, so this for me is bullish harmonic. All right, any M shape like that, I'm looking for a bullish harmonic. What's the 6 point? The 6th point, please. So that is in previous, daily, weekly, in previous, P for previous, D for daily, W for weekly, M for monthly, H for high, L for low zones. All right, previous, daily, weekly, monthly, high, and low zones. All right, that is the 6th point. Okay, so we're going to take a 10 minutes break. All right, and when we come back, I want us to be employing this technique in looking for our harmonic. All right, sorry, bear me a second. Let me. So this is a bullish harmonic right here. So a bearish harmonic will be a W shape that we're going to be looking for on the chart. So easily, once I have this, I can spot an harmonics, and I can spot the thing that look like an harmonic. Look at here. Can you see this? To me, right there, I can check if it's some harmonics. I'll just put my ratios on top of it and then see that, okay, oh, most probably I have an harmonic over here. This is an opportunity for me to trade. I'll just do this straightforward. You spotted harmonics, and then before you know it, you, Mr. Where is your exact entry on this chart? Well, we've not talked about entry more than our entry is a D point, okay? Our entry is a D point. That is our entry on this particular chart. The D point, that's our entry, and that D point is at 78.6. The exact value of the D points now, I can check it out for you, and that is going to be at my 71.35. So, sorry, 71.37. So the D point is falling. Bear me a second. Don't let me give you the wrong answer, please. Right. So the D point is falling in. Oh, sorry. Let me bring it exact. Right. So my exact D point is falling it at 71.36, which is around my previous daily, weekly high and low zone of 71.36.8 as well. So I'm going to write it down. D point. Yeah. What I'm going to do is let me 1 second. Let me bring all this one down for you, so that at least we can take a beautiful screenshot. I'm going to make it so that when we go on, we just go on. I'm going to bring this down for you. I'm going to bring all this confirmation checklist for you as well. And then obviously, I want you to be able to make good use of them. If you want, I can copy this and put it in the chat room as your confirmation checklist. Yes, please. That is the entry. That is the entry. So that's your confirmation checklist as well. If you want to copy and paste it, if you want to take a screenshot, obviously, let me do this for you. Bullish harmonic. 1 second, please. So this is a bullish harmonic to me. I'll use my M shape to find bullish M shape harmonic. And then obviously we will spot so many harmonics together today, so that tomorrow you all are a master harmonic trader. All right. And this one is a bearish harmonic pattern. I will do my best to bearish harmonic W shape pattern. All right. All right. So coming back would be just to spot harmonic, and we just carry on spotting harmonic, and then all right. So I'm going to give us a 10-minute break, which means at 13:26 we're going to resume the class. All right. So 10-minute break now. 13:26 we will resume the class. Let me put it up here. Resume back at 13:26 for 10 minutes break. Okay. All right. Let's do this. Right. So we have a 10-minute break. We're gonna resume back at 13:26, and then we just continue from there, ladies and gentlemen. Thank you so much for your time. If you are benefiting, if this is making sense for you, don't hesitate to write that into the chat room and let me know. Then we take it from there coming back. Thank you.
One of my colleagues.
The thing about self-discipline is that it is necessary for everything you do in your life. You have to be self-disciplined.
Working out, you got to work out every day. You got to stay in shape. If you want to, if you don't stay in shape, you die.
When I'm working out, I always do one extra rep, one extra set, because it's a promise I kept to myself.
But working out might not be a priority for every single day because you've got things going on in your business world and with your family and all that. So guess what? It's a priority for my life. So I do it in the morning before my day even starts.
If you change your mindset and really focus it on what discipline really is, you start to welcome discipline. You welcome self-discipline into your life.
And here's the biggest thing. It's a pattern. It's a pattern I keep of me. I always do a little extra. I always go the extra inch. And the quickest and easiest place to do it is the gym. Because I can always grab one more weight, one more set. And here's what it does. It shifts your identity.
The benefit of discipline in my eyes has always been that through discipline, I get things done.
I do it in the morning before my day even starts. So I can still handle the priorities for the day, but I got my workout done. So long term, I look up in a year and I'm not out of shape and breathing hard when I go up the stairs because I maintain that discipline on a daily basis.
Most people go through life never discovering what their talents are. Most people never develop their talents. You need to tell you no more snacks, no more desserts, no more TV, no, we working out now. Have skills and abilities, but if you don't nurture them, if you don't develop them, they will never serve you. Your gifts can take you many places. If you develop your gifts, the best gifts come from the bottom. I value myself enough to give 120%, or don't do it. And that if you decide that my life deserves my developing this what I do well, why are you only giving 50%? What's wrong with you? I grant you that if you begin to work to develop your gifts, you develop a strong sense of happiness. You'll get a larger vision of yourself. Because part of beginning to get a larger vision of yourself, all of us need some area of our lives where we can have a feeling of competence. When other folk are having a good time, you've got to have the strength of character. You need to tell you that you owe you something. As you begin to develop and expand your skills and your talents and your vision of yourself, you will always be in control of your destiny.
I want freedom. And for me, disciplining myself means more freedom.
It's so easy to be great nowadays because most people are weak. This is a softened generation. So if you have any mental toughness, any ability, you have any fraction of self-discipline, the ability to not want to do it but still do it. People have a hard thing understand. I hate to run. And what makes me so crazy, it doesn't mean more. People go, well, why do you run if you hate it? What are you talking about? I don't want to take showers and eat either. I hate that too. That's life, man. It wasn't until I changed that mentality that I became somebody. I hated going to school. So guess what? I was dumb. But if you can get through to doing things that you hate to do, on the other side is greatness. That's what people understand. By me running, I am callous in my mind. I'm not training for a race. I'm training for life. I'm training for the time when I get that 2 o'clock in the morning call that my mom is dead or something happens tragic in life. I don't fall apart. I'm training my mind and my body, my spirit, so it's all one, so I can handle what life is going to throw at me. Because the life I've lived, that throws a whole bunch at you. And if you're not physically and mentally prepared for that, you're just gonna crumble and you're good for nobody.
99% of people are not willing to do what it takes to make their dreams come true. The Marines have a saying, everybody wants to go to heaven, but nobody wants to die. The center of bringing any dream into fruition is self-discipline. You know, something as simple as food and eating. It's not about your body as much as it is about your mind. It's getting command of your mind to be able to choose actions that are in your own best interest. Every day, we are choosing that's not in our own best interest. So if the world is attacking you and the world wants to fight you and the world's trying to hold you down, so you're going to kick yourself in the balls? So you're going to stop yourself from getting what you dream? And I think the word discipline has kind of gotten a bad name. We think about it in terms of punishment. I'm not talking about discipline in that way. I'm talking about discipline in the sense that you forego immediate pleasure for the exchange of long-term self-respect. I believe that self-discipline is the definition of self-love. That when you say that you love yourself, that means that you have behavior towards yourself that is loving. Self-discipline is the center of all material success. You cannot win the war against the world if you can't win the war against your own mind. Self-love is when you say to yourself, oh, man, look, I know you and that girl got a real connection. I know y'all vibe, but that's your girl's cousin. So I love you too much to let you do that. It's like you say to yourself, hey man, look, I know you want to eat that pizza and it'll be really good, you know, but I can't let you eat that, man, because if you eat that pizza, you're going to feel like, you know, and I love you too much to let you eat that. Self-love is, hey, look, I know you got a test on Monday, you know, and I.
Right. Thank you so much, ladies and gentlemen. I believe you take a little bit out of that to develop yourself going forward. It's all about discipline, you know. It is very, very important that we understand discipline. It is very, very important for us to be disciplined when we are trading so that we can achieve our desired results. It is key for us to hold on to that as a value going forward in life as well. All right. Okay. So for all the people that still remain here with me, I've got Bobby Collins, Eddie, Franca, Fumbi, Galaxy S6, Gomolemo, Dira, Beloki, Batwini, Bois, Humphrey, Jason, my man Joseph Mensah, Kwakuhanim, that's my man. We had a decent conversation this morning. Leah Tunrayo, Olugbemiga Shalabrambo, Sakaria, Daoud, and Iron Saint. Thank you for being with me, you know. I know you are here with energy. Yeah, don't worry, I'll share it, don't worry. Yeah, it's all about that really and truly. So going forward, I believe you've all copied this. I believe you are now seeing much more clearly what the confirmation that you need to put in place are. A couple of things that we can employ on this chart now going forward is this. We can look for, if you remember where we're coming from, going back to that 4-hour charts. I think I need to restart my system at a point in time. don't know the reason why it's so slowing down. Right. So going forward, yeah, I've had it on for so long. Okay. So I believe you've copied this. I believe I can. What I'm supposed to do is this was so pretty. Don't mind my. That's telling me 11:30. Any trade opportunity? Let's see whether we can find trade opportunity quickly based on this noise maker, right? Yeah. Wow, that's good. Well, where we are sitting currently, we sit on support. So literally selling this now as a bearish engulfing the retracement back to that area. I would have loved to sell it from 83.79 because we are literally sitting on so many areas of support right about now. So I'll leave that alone. Dollar Swiss is not a good Cardian is not a good sell for me immediately. Let me look for dollar Swiss. All right. So, well, the thing about today is, despite the fact that this is making noise, is we have to understand that the volume is going to be thin. There wouldn't be any much of anything going on this particular one. So we just leave them as it is. The volume is going to be thin. The sound is low. How about now? Is it still low? Let me see if I can share computer sound. Wow, the sound is low. It's fine now. Probably it's my voice. Probably I'm the one that's lowering my voice. All right. So I hope I can keep up with my voice a little bit louder for you guys. All right. So the first thing first that I want to do again is I want to look into, I've shown you how to use your trend line. All right. For the upcoming opportunity on the Aussie dollar. The next thing I want to do is this. And it's quite key for me, for all of you to be able to understand how best you can develop yourself in this trading world. The opportunity that's out there for you, if you understand the skill, if you learn the skill, is so immense. And some of the people that have been working alongside with me are already taking advantage of that opportunity little by little. All right. And that's the reason why I want you to understand the skills, because I want us to be able to go and take on the world. I want us to be able to go and help so many other people. I want us to be able to do that in our free will. And I want to provide as much as possible support I can provide, so that looking at the world and looking at 1 billion people, and together with you can be like, wow, we have a positive impact in the life of people. When it comes to the way that they and when it comes to the way that they live, when it comes to the way that they make money, when it comes to the way that they presenting to every one of us going forward will be structured. All right. So can you see something spectacular again coming up? All right. So you're looking at this from this low to the current high that we had, just looking at the whole of this move, right? We are literally sitting on what is called this 0.618 when the fib is 1 second, where is that fib coming on? All right, so the retracement that we are actually seeing is the 61.8. When I reverse the fib, we are sitting on a 38.2 retracement. All right, so the whole entire of this move is sitting on 38.2 retracement. All right, so now you're building a test case. So now let's build this. All right, so is this trade going to be sensible or not? You don't know, or you have one harmonics, you have a cipher. If it's one trade that you are able to take like this in a day, I'm quite happy. You have a support and resistance, which you can see clearly. All right. Number 3, you have your previous daily, weekly low area. All right. We've seen that already on this side, which is at 71.6, falling at 0.7136. And then we have another one falling at 0.71 at 0.7131. All right, I've teach this on our last training session. I usually teach you this so that you can understand the important power of support and resistance at the highest level, so that you can understand that at this particular week, at this particular point right there, yeah, which is a previous monthly high area, all right, previous month high area, a trader is actually there. It can be Citibank, it can be HSBC, that's selling this massively like this, all right? And that is why that resistance of the previous monthly high is very, very important right there. Look at that sell-off, you know. You can see the impact of that move. You can even see a trader literally buy all the way up to that higher point, all right? So, and right now, although everything looks weak, okay, price is coming down, but we are looking for areas to buy back again. One of the areas that we've seen is this zone here, and Harmonic is present in that zone, okay, and we want to check whether that zone will be a valid zone for us going forward. So, a couple of things that we've employed our Harmonic, we've employed our support and resistance area. Now we've seen Fibonacci at 38.2. All right, 3 is Fibonacci at 38.2% retracement. Retracement. Okay. All right. Okay. And the maximum target that we're just looking for, we're going to be discussing that as well. So if I expand this going forward, we have enough checklists in this zone. Okay. We have enough checklists in this zone right about now. The only thing that we are looking for is possibility of how price is now going to behave in this zone. Okay. So once we have all this, let me reduce this a little bit. 14. Right. So that's what we've seen for now. The next thing that we're going to be looking for is, okay, now we've got our zone. All right. Does it mean that price is just going to turn? No, price might not just turn easily, but we're going to be looking for possibility of how price is respecting our zone. So at the zone, we have this gravestone doji, okay? But the sell orders are still coming in massively, okay? One of the great tools that you can use, like I said, is a trend line. You may want to see a break of this trend line before you start to buy. All right, which means this particular chart now, you are finished with it, okay? All you are looking for is for it to turn around, okay? And if it's going to turn around, you want it to break this particular trend line, all right? You want it to break this particular trend line. So this trend line will be your key watch going forward. You'll be watching it closely, all right? So, and then you want to see a convincing break of this trend line if you're someone who can watch the price. So you keep this one right there where it is. If you are not someone who can watch the price, you can enter the trade, okay? And when you enter the trade, that means you are entering the trade without making sure that you finalize the right confirmation that you want to see. So if you're busy and then you just want to enter the trade, you can enter the trade. For that particular case, your stop is going to be looking towards getting itself down from where it is currently to 38.2, which is about 28%. That's going to be what which is about 28 pips, okay? But if you know that you have time and you like watching the price and you want to watch the price, you can put an alarm on this particular trend line. Let me show you. Say, for example, now I have my C trader account and I want to enter this trade Aussie USD, right? If I know that I have time and I want to watch, I can, 1 second. Right, so someone is noting seems divergence is also present here. And that is the part when I was talking about the kind of indicators that you can employ. All right, so if I decide to put an indicator on this that will show me whether there's divergence or no divergence, let's have a look at it. Okay, so right now with this my MACD indicator, the MACD indicator, I can see that there is some possibility of divergence. Checklist. I can see there's possibility of divergence. I can see that the price is high here, the MACD is low, and the price is low here, the MACD is high. 1 second. So this is a divergence going on right there, okay? And then if I decided to, bear me a second, excuse me, if I decide to duplicate this, right, so duplicating this, I'm bringing this, 1 second, let's get another one. Duplicating this, I'm bringing this way up. It's showing me divergence on that, all right? But does it mean that price is ready? No, not yet, all right? So one of the key ways for you to know when price is ready to turn, I've given you a clue to that, is by seeing it turn on the trend line, okay? You can see it turn on the trend line. So all I'll be waiting for is, I can wait for a couple of things. I can wait for my trend line, break, duplicate. So I'll put my trend line here right now. All right, so I can wait for that trend line break. Okay, now when I see a bullish break above that trend line, I know that this is ready to turn, because the problem is this: you do not want to be part of a move that is still falling and continue to fall, but you don't know when it's going to turn. So you actually want to be part of the move when it's actually turning. Everything is setting up nicely for this trade, okay? The only thing that you now need is to understand the patience that you need to see that will make this trade start to work. All right. So the patience that you need to see that will make this trade start to work now relies on how you can literally wait for this trend line to be broken. All right. Or how you can wait to see that actual bullish move that's going to resume in price, and it's going to be broken, and it's going to start to take the price up. Until we see that this is not yet officially ready, the setup is nice, ready to go, we are in a very good place, everything is bam with this. All we have to do is wait for the trend line, and I can set an alarm. All right, I can set an alarm on price. I can set an alarm. 1 second, please. I can set an alarm or an alert, all right? And that particular alert notify me when asked and this and that. So the break of the trend line. Okay, so I can take create alert and then close that. You know, when price is coming towards this area here, I'm breaking this trend line with momentum, the alert is going to alert us and let us know that that is going to happen. and then that will be the time where we want to look at this for a buy. All right. But because the price is trending seriously down, we just don't want to jump in and buy. It's not yet ready. The orders that are in the market are serious sell orders are still in the market. Now they are reaching a point whereby they can balance up and things can turn. So yeah, that is what we can see currently on this cipher Aussie dollar. And then it's time for us to go and look at another chart. All right. Is this understandable at all? Do you feel like I say if you gain something from this? Any question at all before I move on to the next one? Bobby Collins, thank you so much for calling that divergence call as well, so we can add that to our confirmation list. That would be where I mean by oscillator overbought and oversold. Thank you so much, my man Bobby Collins, all the way from Nigeria, representing the trading community. Yeah, let me get this up like this. So when I mean by the overbought or oversold oscillator, yeah, your MACD divergence can be part of it as well. So now you have 8 different things that you are looking at. Let's say divergence, or you can use it as overbought or oversold divergence. All right, so it can be. So once you have all these key things together with your, so on this one now we can add to it and say we have a MACD divergence 4. The divergence. All right. So the last thing that you always have to ask yourself is, why will I not take this trade? All right. So you have to look for one single reason why you wouldn't take every single trade that you or analysis that you find. All right. And then the one reason why you wouldn't take this trade now is price is still falling and no sign of upturn. Okay, which that is I have to wait for a bullish momentum to show up in the Aussie dollar. All right, so price is still falling. Then you want to wait for a bullish momentum. All right. Once you can ask yourself that kind of a question, then you are always aiming to be a profitable trader. Everything has lined up nicely. We have our harmonics in place. We have a support and resistance in place. We have a previous daily, weekly, and low at that area. Fibonacci at 38.2%. MACD divergence. Why would I not take this trade? Just because price is falling. All right. We are close below the previous monthly high. We are at the region of the previous weekly lows, 2 previous weekly lows. That's where we are testing currently. And that is weakness right there. Okay, that's weakness right there. And that weakness, you literally want to see it turning around before you can say you want to buy that. All right, so that is Aussie dollar. All right, should we look at another Aussie pair? So in this case, I will say Aussie. Any pair in Aussie, Aussie JPY. All right, Aussie JPY. And one thing I want to show you quickly again, let me look for the trend in Aussie dollar based on this 30-minute trend. I like the 4-hour trend. So the 4-hour trend is approaching a particular region on the chart, which is more or less at the 200 EMA for me. So this area, the best price to be buying on Aussie dollar will be at this swing low right here. Right? Will be at this swing low right here at 71.21. All right. So I don't even want to buy the 71.36. I want price, since it's showing me that it's coming down. I want it to come back down to this swing low. All right. and that's where I'm going to be looking to buy. And this swing low is literally going to be sitting inside all of these rejection levels. All right, so we've got rejection to the upside. There's no need for me to rush into buying this. I can wait for price to come and show itself the kind of reaction we want to do inside this area, because the pressure has been pressing down. So when you look at the market condition for the day and you're seeing that it's the sellers that is denominating, okay, you just don't want to go in and say that, yeah, Harmonic is present. There's presence of Harmonic. So because of this presence of Harmonic, things are just going to turn. But no, you can see the pressure. You can see that when they sell off this, they try to literally push the price back up again. Then we saw a massive sellers present pushing the price down. Again, we retrace. We couldn't retrace as much. A massive sell-off is still happening. So we are on a leg of sell-off. We haven't seen, I don't get the strength indicator for MT4. All right, so it's on our chat group. It's on this chat group. Wait, let me. All you have to do is you want to come here, all right, and then you want to say currency strength indicator. So if you come to my personal chat room, you'll be able to see it there. Oh, wait, I'm searching somewhere different. I'm supposed to search here. Well, it's bringing it up in a different manner. Let me look for it again. So all I know is select files. Right. So if I say it's file, currency strength indicator. Currency strength buyer.